I know you think that what's going on now with tariffs and this whole trade war is only going to make Bitcoin ramp even faster, right? You're describing this as an unintended consequence. So here's the cheeky part, right? Is it really unintended? Because I can think of at least a couple of people, not least the president himself, who have skin in the Bitcoin game.
Yeah, well, I've definitely said that there's been unintended consequences from the tariffs. I think the best way to describe it is what happened this year with the implementation of the tariffs. I don't think was intended by the administration. That's why there's been so much backpedaling that's gone on really since we had the week where bond stocks and the dollar fell in the U.S. and you saw rates moving higher, which was not in their plans. So what I've talked about with regards to Bitcoin was not intentional, meaning I don't think, and I'm certain of this, that they understood that that would go on, but that high correlation move that we haven't seen before that reminded everyone of an emerging market. For me, that was really the beginning of the end of the trust of the fiat system. So when I've just, written about this and described it, the fiat system, this has, been an experiment to have a non-gold backed global reserve currency that started in 1971. The personal computer came out in 1976. And if I took you through a timeline of all the crises that occurred, whether it's the Asian financial crisis, whether it's the great financial crisis in 2009, whether it's all the money printing that went on with COVID or Silicon Valley Bank, we've always had these little incidents where it's led to more debt, more printing, and Bitcoin came into effect as kind of the final stage of the rise of the digital economy because we needed to have some sort of money payment, which didn't exist until Bitcoin came. So I think what has happened this year is they've broken the trust for other countries with the U.S. in terms of the fiat system and the global reserve currency. I'm not sure the administration wants that role anymore based on the way the election went and what we've seen in their comments. And I think the rest of the world has lost trust. So I think this was an unintended consequence that just is front loading, in my mind, a faster rise in Bitcoin because I think many people are leaving the system faster than what had been anticipated.
All right, Jordi. So it sounds like what you're saying is this, we shouldn't be thinking of Bitcoin or crypto so much as risk assets, right? But more as anti-fiat currency or rather even anti-dollar assets?
To some degree. I'll tell you what, Martin, this year, I think the way people, we have a lot of money in the world, obviously, in the fiat system. So the argument always for Bitcoin and for gold at this point is that if you have, $500 to $800 trillion of fiat assets and they need to generate returns, especially liability-driven investors like pension funds, sovereign wealth funds, insurance companies, they need to make returns. Bonds aren't producing returns at this point. If stocks don't start to pick up in the U.S., most people are heavily weighted towards the U.S. What is starting to happen is not that Bitcoin is a risk asset, but it has produced significant returns over every asset since 2010. It's now the sixth or seventh largest asset in the world, behind most of the tech companies and also gold. And I think if people need to get performance this year and they're not getting it from bonds and they're not getting it from stocks, you're gradually going to see more adoption into Bitcoin because everyone needs to make returns who has liabilities. And I think that's the driving force, not as much a risk asset, but just the fact that it's been performing.
What about other coins? I guess my question is Bitcoin the only game in town in 2025? Because there is a lot of talk about Altseason versus BTC dominance. Will it be something that would hold in this cycle as well, that they actually sort of take turns in terms of seeing this massive upside, if your predictions are correct?
So, Sherry, my view of Bitcoin, I think everyone in the crypto world has their own vision of kind of what the future holds. I think mine is as what they call a Bitcoin maxi. The other coins, to me, are innovation. Bitcoin is not an innovation. It's not something in terms of a technology that is the most efficient. That is why there's been other ones. That's why stable coins exist and really at this point are the bridge between the crypto universe. I think every single other coin, whether it's Ethereum, whether it's Solana, you can go up and down the list, Cardano, the ones you have up here, they're all innovations, and eventually all innovations are out innovated. We've seen that with the fiat system. There's always a company that replaces a new one, and I think that's what those are. I really think Bitcoin, at least in my world, represents something in the future that's more like the S&P 500. I've talked about the fact that I don't know how any companies in a world of abundance 25 years from now can be valued when we have humanoids and when AI is smarter than every human being. It's a different world, and it's hard for people to kind of put into perspective. So what I've said is the biggest negative against Bitcoin from people I talk to in the US, particularly people that manage a lot of money, is that there's no intrinsic value. I think that's one of its benefits, is that it just is an asset that's large, that doesn't have intrinsic value. And everything that does have intrinsic value, I think, is up for disruption as we head into abundance.
And what about cycles in Bitcoin? Because after a few months after halving, after every 4 years in 2017, 2021, there is this massive rally followed by a couple of years of a bear market. Will that hold in this cycle for Bitcoin? Is it something that's not avoidable?
I think we're at a very different stage in Bitcoin. This is my own personal view. You could have a bunch of really smart engineers and coders come on, and they're going to talk about the halving and the fact that it still matters. I'm a macro person who kind of looks at cycles from an asset perspective and from a money printing perspective. The dollar is weakening, and I think it's going to continue to weaken in the foreseeable future because most of the world's debt in the fiat system is in dollars. This adds a lot of liquidity to the system. AI is offsetting some of the liquidity, and it's making it more difficult for public companies to go. So I've kind of looked at this situation with the halving and with the cycles that Bitcoin is going to have a very different, let's say, next 2 years than what people would have expected. I'm expecting a much more significant rise for the reasons I gave before this year, just because I think the U.S. embarked on something which front-loaded the breakup of the fiat system much faster than what would have expected. And we're going to settle into a tripolar world, Europe, the Americas, and Asia. And I think when that all sets up, everyone's going to be looking for investments. And I'll keep saying it, artificial intelligence is going to disrupt all businesses going forward because of the pace of innovation, just like the Mag 7 disrupted every company in the world over the course of the last 17 years.